Talk to us about just trading at the moment, opportunities in the crypto space. Are institutions just pulling back?
Yeah, I think it's a really quiet time in cryptocurrency right now. And for traders like us who are high frequency and low latency, we depend on a lot of volumes. So we're not seeing that. And over the course of the past 18 months, a lot of traditional shops like the Hudson River Tradings or Citadels of the world have come into crypto. And I think they were doing great for a bit, but now they're finding there's not that much to go around anymore. And maybe they'll be thinking twice about whether they want to stick around next year.
Okay, so talk to us about what you need with trading volumes. What is necessary to build back those trading volumes? Obviously, a little bit of desire to get in, a bit more of a bullish sentiment, maybe stocks to move. But is there something more within crypto itself that needs to come back to bring back the trading volumes?
The number one thing we need is trust. People have to feel safe, especially retail investors and institutional traders like us, that if we're on an exchange, our money's going to stay there and that we can continue to trade successfully. That's the most important thing. And I think adjunct to trust, we need proper regulation. And that's something that guys like us have been crying out for a long time. Unfortunately, this big disaster had to happen before DC really started to take notice.
Let's go first back to trust. There is still a lot of nervousness out there. FUD, as the crypto world will call it, fear, uncertainty, and a lot of that still surrounds some of the exchanges, whether it be the lending that might have been done on Genesis, whether it's what's happening over with Binance. What you're hearing from these exchanges and other lending protocols and the like, are you building trust? Are you feeling more confident around it or no?
I think we're taking steps towards trust, and we're seeing exchanges in particular doing more to create transparency, to say, hey, this is where our reserves are, and you can go and verify on the blockchain that we actually have these assets. And that's a good first step, but we need to do more. I think we need to see full audits of exchanges, and we need them to be accountable to regulators who can get inside the building and see what's actually happening with the balance sheets and with the assets.
Okay, so talk to us about regulators, because there's almost a bit of a squabble here in the US about who's going to be the key, whether it's going to be the SEC, whether it's going to be the CFTC. But for me, as a bit of a European, I look at what's happening in Europe, and they're already getting through some of this regulation and putting it into action. What do you make of what's happening globally?
Yeah, and I think Europe's been very smart. The EU wants to capture a lot of this cryptocurrency market because long term, they see a future there. So the legislation like MiCA is a big help. It lays out exactly what the definitions of particular types of cryptocurrency assets are, whether it's a utility token, a security, or e-money. And they're also setting out requirements for crypto service providers like exchanges and custodians and brokers, so that, again, retail can feel safe and regulators can be sure that everyone's house is in order.
Okay. That's got really interesting echo for me to what happened with GDPR, what happened with data, the fact that Europe did just get there faster, which is kind of extraordinary given they're not one country. They're a grouping of different countries with very much diverse thought. Is this going to keep on happening? Is Europe going to lead the charge? And is that ultimately kind of a good thing for then setting regulation elsewhere?
I think it's a good thing for them to lead the charge if they can. I think the U.S. is now going to want to come in and do what they can. But one thing I admire about the European process is they've worked with industry leaders to make sense of this very complex and new technology. I think it's hard for regulators to wrap their heads around exactly how this all works and what the risks are. And I think that's why in the U.S., the CFTC, SEC, they've been a bit slower to get around this really hard problem. So I do hope in the U.S. they'll engage with industry leaders.
What's interesting is, of course, while we all worry about perhaps the centralized bit of crypto, particularly the exchanges, how's DeFi doing? How's decentralized finance thriving or not? Are institutions more willing to look there? Because there's a load of money.
Yeah, I think DeFi is still kind of trundling along. Obviously, the whole market's a bit depressed, and that does spill into DeFi. But we have seen some volume shift away from centralized exchanges to DEXs like Uniswap or DYDX. So I think there's a lot of juice to be had there. But you have different trust issues there. You do worry more about hacks. You do worry more about kind of these tail risk events that can get you into trouble. And you have to be very careful when you're talking about self-custody.